Last week, we talked about the power of cash flow and net worth statements, and then their ability to help us see what's really going on in our financial life, to find planning opportunities, and to make better decisions going forward. If you haven't listened to that one yet, you need to stop this one and go back and listen to that one, and then you can catch back up and see where we're at today. Because today, we're just going to be kind of practical, just give you some pointers on how and when do we make cash flow statements and net worth statements. When should we be doing these, and then how do we actually go about doing this? So first, the when, right? I think for most people, I recommend that people do this annually, that we complete a net worth statement and a cash flow statement for the year. And so if you're making a net worth statement, we would make that for December 31st, 2022. And then kind of, hey, what was all of our balances? What were we worth? Everything that we owed, everything that we owned, what was it all worth at the end of 2022? And for our cash flow, then of course that statement would be, hey, how much money did we make from all of our different sources, and where did it all go for the entire year of January 1st through December 31st, 2022. So we do this annually, and that's just a great way to pull year-end values. You can pull statements, year-end statements, monthly statements for that last month of the year, and you got taxes that are due at the end of the year and all these things. So you can have a lot of statements that will be year-end that way as far as the cash flow side of it goes. And so it's just a great time to do that. And then you can see that year over year, as you start making these one after another. And we talked a lot about last time about having this each year and seeing the trajectory and the total trends for your cash flow and your net worth. Annual is just a great time to do that. So for most people, I would say annually. If you're really passionate about improving your finances and getting things better, faster, or you have a very dynamic income, right? And that changes quite a bit if you're 100% commission, or if you're, one of these other things, then you may do it as often as quarterly. And you can see kind of, hey, how did we do in the last 3 months, and what's changed, and how do we make adjustments? And so if you have a dynamic income, your life changes a lot, or you're just really passionate and you really want to see changes, you could try to do it quarterly. But for most people, just not enough is going to change over the course of 3 months, and you really need a whole year to see what has happened. Now, of course, if you've heard me in other things, like I'm all about quarterly planning and making quarterly goals, and there's a lot can happen in a quarter in the rest of your life, but finances just don't move that quickly. Your net worth doesn't move that fast. And so doing all this work to create these statements, you don't have to do that often, unless, again, you're really passionate, really want to make these things happen. Beyond that, right? But your mortgage just doesn't pay down that much in 3 months. It does over a course of a year, right? It's cool to see the difference between, hey, our value of our home has increased, and we've paid down this amount of our mortgage over the course of a year, and so we've grown our net worth by that amount. That's cool to see over a year, right? We don't want to be looking at our investments very often. Once a year is a great time to do that, and so you can track a lot of these things just once a year. And if you're trying to do it more often than that, that's where we're going to use a budget. We'll talk about that next week. So how do we create then a net worth statement and a cash flow statement? And if you are, I'm going to say this quick, if you're a financial planning client of my firm, Lacrosse Financial Planning, then we are going to be doing this for you and with you. And as much as we can be completing your 2022 statements, we're doing that for you here in January, and then we'll work together to finish it off. So if you listen to these live when they air, then you're going to hear about that in just a few days and a few weeks here as we send that out to you. Or you have gotten a link to this episode that we sent you when we announced that we're doing net worth statements. So if this is the first time you're joining us, hi, welcome. We do this every week. And so if you're, again, a client of ours, we'll do this for you. And if you're not a client, maybe you should be. But if you don't want to be, then what we do have for you is some templates to get started. All right, and so if you go to retirementmentorship.com/97, this is the 97th episode. So all of our episodes, they're all numbered, and you can always go to retirementmentorship.com/ and then the digits for that episode, and it'll redirect you to the blog post for the episode. And in that blog post, we've got 2 sets of templates for cash flow and net worth. Both of them they're Excel spreadsheets, and they have one sheet in there for cash flow and one sheet in there for net worth. And we have one for accumulators, people who are still working and still saving up, and one for retirees, because that looks different. And we talked about this a little bit last week, but especially, right, you save a lot less after you retire than before, because you're saving a lot for retirement while you're working. And so obviously that stops when you finally retire. And then instead of saving into it, you're distributing money from your accounts when you are in retirement, and you're saving into them, obviously, when you're in accumulating. So they change enough that we have templates for both. But those are Excel spreadsheets, Microsoft Excel spreadsheets. If you don't have a Microsoft Word subscription, if you don't have it through work, you don't have it personally, Google Sheets now can open and edit full XLSX, Excel spreadsheets in Google Drive. And so if you've got a Gmail or whatever, you can go to drive.google.com or whatever it is, and you can just upload it there, and then you can edit it right in there. And so anyone can use these. They're free to use. The templates are out there for free. You don't have to do anything, right? I thought about maybe reserving this for retired members, but even if you're not a retired member, you can just go click those links in that blog post, and it'll just download straight to your computer, and then you can use those. And so that's going to be the easiest place to start, is start with a template. You can always change it. You can edit it. It's good to have it kind of be, get it to a point where you want it, and then try to use the same template year over year so you can see those comparisons better. But this is a good place to start. So for net worth, right, how we do this, then, so we're going to start with that template, and we'll get it up here in the video. You might want to, if you're normally a podcast listener, you might want to stop and jump over to the video and watch this on YouTube instead. Again, you'll find the video link right in that retirementmentorship.com/97 as well. We're at about 6.5 minutes or so into it, so you could switch over to it if you want to jump into the YouTube video at that point, because we'll have it up on the screen. But first, you're going to want to get for net worth, you're going to want to get all your year-end statements, right? And so if you have retirement statements, 401k statements, brokerage statements, all those should all be available by now for ending December 31st. And right in there at the end of that period, it should have a balance, and just grab that balance. Don't worry about all the the negatives in there. If you're looking at a year-end statement for your investments, or just grab the balances, transfer those over to the template that we have, right? And so that's a good way to do all that. You can do that for all accounts, any money that you own. You can also do that for debts, right? You can have a year-end mortgage statement or something like that, or just if you logged in between when the year ended and that January payment, then you can see kind of what the balance was at the end of the year there. You can grab those. Credit cards, loans, any accounts that you have at all, banks, either things you own or things that you owe. You should be able to grab a statement, get that year-end balance from those, and put them right in the net worth statement there. We also, I use Zillow for home values. A lot of people, just kind of think they know what it is or whatever else. And Zillow is good at any better than many, right? So if you go to Zillow.com, you can find your house. I think it's a pretty good estimate, right? Some people think their house is worth way more just because they overvalue things that we have. We have a bias towards valuing more what we own than maybe it's worth on the market. Some people, they've done a lot to their home and renovated a lot, and Zillow's not necessarily going to know that or reflect that, and so it really would be worth more than what it says on there. But if you haven't done any of those things, or you bought it recently, it's only been a few years and haven't done too much to it, that's going to be a pretty good place to start. And then each year you can just find the Zillow value of your home and grab that and put it in your updated net worth statement and see how the value grows over time. And then as your mortgage pays down on the other side, you're going to see that equity increase in your home, which is good to see. For vehicles, I do like putting vehicles on a net worth statement because they're big purchases typically, right? We did a few episodes on purchasing vehicles and whether you should own or rent or own or lease, I guess, and all that back in the day. So you can find links to that in the blog post. But it's such a big purchase, right? And they do go down in value. They're not assets. They're big expenses, big liabilities that we buy, but they are at least worth something when we get them. And even though that generally decreases over time, if we have that much going out in our cash flow to get them, then we should at least be able to see that on our net worth so it doesn't look as horrible when we make these purchases, right? And so I get those from kellybluebook.com, kbb.com. You can go on there and check the value of your car. If you were the kind of person that trades in your car, right? If you get new cars from dealers or even used cars from dealers, and you're the type of person that always goes in and just trades in your existing car to the dealer for a trade-in credit towards your new vehicle, then use the trade-in value that kbb.com gives you, right? And if you are the kind of person that goes out and sells it on Craigslist or Facebook Marketplace or something like that, and you do those transactions and you sell it that way, then you can use the private party value. But if you're the type of person that trades things in, right, and then you say, oh, well, it's worth a lot more if I do a private party sale than I do a trade-in, so I'm going to use the private party value, but then you go ahead and trade it in, well, you didn't get that full value then, right? So don't, let's not kid ourselves and pretend like we're going to go sell it next time to private party when we're definitely going to do a trade-in and use whatever value you would actually use if you were to sell it this year, right? So that's a little bit on car values, how I would do that. There's also a spot on the template for like personal belongings. don't overestimate this category, right? Like this would be kind of an estate. Like if you had an estate sale, if you both passed away, if you're married and you both passed away, and they had to sell everything in your house, like maybe what could they get for it? And it's gonna be pennies on the dollar, right? Estate sales are just everything must go. It's all worth nothing. So you could maybe do just a general amount for the total amount of stuff you have in there, or maybe you got some collectibles or some of these other things that you want to put in there. But some people just choose to put nothing in there at all, and that's totally fine as well. I think cars and if you got RVs or big toys, like those are worth putting on there just because again they are such a huge expense for something that we can get a market value for. But if it's just oh well, I got all these clothes and they're probably worth $20,000, no, probably not, right? So don't abuse that category as you're putting these things in. So net worth is pretty straightforward, but you can pull out of these things. You can get those statements and you just fill in everything out on the one side and put it all on the other. If you're the kind of person that spends money on a credit card just for groceries and all that other stuff and you pay it down right away, you don't necessarily have to, and you don't carry credit card balances, right? You don't necessarily have to put your credit card balance on there, but make sure that whatever you did have at the end of the year, that you're at least subtracting that from your banking then at one point, right? So if you actually had $22,000 in your checking, but you had $7,000 in credit cards, you can either put both of those in there, right? $22 in checking and $7,000 in credit cards, or you can say, well, nothing on credit cards because I'm going to pay that off as soon as it comes due, and then subtract your banking by $7,000 as well. So you do $15,000 and zero, right? Just make sure that you're not claiming everything that you own and neglecting some of the things that you owe when it comes to doing that. So just be uniform, do it the same way, do it right as you're putting those in. We don't want it to. It's just for you. Right, so we're not trying to warp the numbers and make things look better than they really are, because the only one this is for you to make better decisions. So if you're lying about what's on there, or you're construing it to make it look better to yourself, that doesn't do all the things that we need it to do. So this is just for you. Let's make it as accurate as possible. Then for cash flow, we want total gross income on the top there. And that's before taxes, that's before retirement contributions, that's before any of these other things, and before any deductions, any taxes. That's the number we want at the top for your earned income or your retirement income. So if you're still working, your final pay stub of the year is a great place to get that, because it should show you, hey, gross, here was your total gross numbers that you were paid year to date as of the last check of the year. You can also grab those from like W-2s or 1099s, or other places in the tax return will have that information. So those are great places to pull that from. If you're retired, right, then you're going to want your gross Social Security, your gross pensions, your gross IRA amounts that were paid out, not the actual part that hits your accounts, that hits your checking account or whatever else, but the gross amounts. We want total income, right? Because we're going to account for those deductions and taxes elsewhere. And so again, 1099s are a great place to get your what was actually distributed from your IRA, what was actually distributed from pensions, Social Security, all that as well. If you have Roth IRAs or HSAs that you contribute to outside of payroll, make sure you grab those numbers. If you distribute from those accounts, make sure you grab those numbers, because they're not going to show up on your 1040. And so depending on what you have, you may have to hunt in different places to find the legit numbers. And again, that's why we don't do this every year, right? The whole process probably takes an hour. And so we're not going to do this, every month or even every quarter. But if you do it once a year, spend 1 hour once a year to compile all this data, right, then it's going to be very helpful in making good decisions for the entire year. So spend 1 hour, 1 day a year, and it'll help you make better decisions for 365 days. And so we'll have all that on the income side, right? Everything that we own, both the retiree and or on the accumulator cash flow sheet that we have. And then you want to start adding, hey, what did we save, right? If we knew we saved a certain amount into our 401k, then we want to put the dollar amounts in there. Hey, again, last pay stub's a great place to do that. What was actually subtracted from yours, right? Now it was added from employers, but just what was subtracted from your accounts, the total amount that went into your 401ks. Right? So then it's not just 3% or 10% or 15% or whatever you're putting in there. You can actually see, oh, great, I saved $3,000 in my 401k. I saved $20,000 in my 401k, whatever it is, right? We want to see those gross numbers in the savings column. If you're doing Roth IRAs, HSAs, all those, right? Hey, where are all the places that we saved? If you're retired, where are all the places we distributed from, and where all contributed to the income that we had there. And then on the other side, we have that tax section on our spreadsheet, on our cash flow sheet, and it will do some dirty math for you. So if you just have gross numbers in there, it'll sort of kind of give you, hey, here's, if you're, I think it's just set for if you're married, finally joining, it'll give you a standard deduction and automatically subtract out some IRAs and 401k stuff or whatever. It's totally just just to give you an idea of what it might look like, go actually pull the numbers from your tax return to actually find out what these things are. And then it will show you right on there, hey, how much did we really pay in federal taxes? How much did we really pay in Social Security and Medicare? How much did we pay in property taxes and state taxes and all these things? And what's the percentage of all the money that we have? Sometimes it feels like, well, where is it all going? A lot of it is going to taxes, right? And I think when you see that final number and you make X and then you see a huge Y that went to taxes in that same year, you're like, oh, so that's why tax planning is important, right? Because we have so much of this going. How do we make sure that we minimize that over a lifetime? It's going to be a huge number, and so that's interesting to see. You might just look at me like, isn't that interesting? So that's where you get all the tax stuff. Then it's got a place in there for insurance. It's usually kind of a fixed and somewhat boring cost, right? Life insurance, health insurance, long-term care if you have that. Some of these other ones, it's property insurance, auto insurance, homeowners insurance. You can put all those in there just to, again, see how much of our total income is going to then protecting our assets and our income and some of these other things. And is it too much? It seems like a lot. Maybe we need to go to an insurance broker. Maybe we need to go see a fee-only fiduciary financial planner who can evaluate, and they can just tell you like, hey, yep, you've got too much insurance here. You're paying too much, or I've seen better rates. Let me give you, send you to a good place where they're not just going to sell you something so they can make bigger commissions, but can get you the right insurance. You're just not going to know that until you know what the numbers are. It's a good place to see that. When you're doing that, you can get annual statements for like life insurance or auto insurance and all that. And those will usually renew like whenever it renews. So maybe you got June 2nd, and so it renews every June 2nd. And so you're not going to have year-end statements for that necessarily. But I think an annual statement does just a good job of, because they usually don't change too much year over year. And so it'll at least give you an idea of what you paid for. So if you just take the September 1st, 2022 auto renewal statement, that you should have received at some point. Just use that number for your 2022 cash flow, and then when you get the new one in 2023, use that number for your 2023 cash flow, and so on. And it might not perfectly overlap, but it'll give you a good idea. And then lastly, there's some insurance, cash flow, and then there's some numbers on there, right? So if you're have yet to retire, it shows you how many years. You can put in the age you want to retire, and it shows how many years you have left. All right, so how much longer do we have to save and to get this where we need to go? If you're already retired, it shows, hey, this is how long we've been retired, and this is how many years we need this to last for, right? And I just threw in a number there. You'd have to put in your own, like how much you expect to live for, right? But kick it out there, and it can be just a good reminder each time you look at it, like, I know the market's down. I know some things seem really bad, but hey, realistically, I could still live another 25, 30 years, and I need this income to last. So let's make sure that we're forward looking on all of these things. And so it's got some percentages on there on our template of savings rates or distribution rates or how much we're paying in taxes and all these different things. And so all that's just a good, helpful amount. And then the last part on there's some things for debts. How much of our cash flow is going out to pay for the past, right? How much of it's going towards mortgage, some of which is building equity. It's actually paying down the actual balance, and some of it's just going to interest. And so we can see all those numbers right in there too and make good decisions on that. So again, takes probably an hour to do this. Carve an hour, schedule it in your calendar to pull all this information, get it. If you're a client of ours, we're going to be doing this with you, and we'll do as much as we can. Then we'll send it to you so that you can see what we have and fill the rest of the way out if you'd like to. And then you might be asking, if cash flow is the past, right? It tells us where we have been, and net worth is the present. Where are we at right now? How much do we own? How much do we owe? What tells us about the future, and how do we start controlling that a little bit? And a budget is going to tell you where you're going, right? Cash flow says where we've been, net worth statement says where we are, and a budget tells us where we're going. And so that's what we want to cover next. We want to say, hey, how do we start controlling this? How do we start making, being in better control of our money, being good stewards of it? And we're going to spend a couple weeks then on budgeting. And if that makes you groan inside, then stop right there. That means you've done it wrong in the past, right? Because people can do budgeting wrong, and it's this horrible nightmare of spreadsheets and all these other things. And there's lots of ways to make it suck. And so if that's your first impression of budgeting, then wait, come back, listen to the couple episodes we're going to do on budgeting, and I believe we can change your mind. Because done right, budgeting can be deeply freeing, empowering, and even fun if we do it right. So come back for the next couple of weeks. We're going to talk about budgeting, and again, just covering all our bases at the beginning of the year here so we can make 2023 our best financial year ever. We'll see you next week, and have a great week. Cheers. If you enjoyed that, you would love being part of our free membership community. It's called Retire Membership, and it has a host of benefits all for free. For example, you can always buy my book, 3D Retirement Income, on Amazon. But if you join us at Retire Membership, we will send you either a hard copy or paperback for free, provide the ebook and the audiobook so that you can listen to it if you don't have time to read it. In addition to that, we'll also provide you with a bunch of content that you can't get anywhere else. For example, we have our quarterly Retire Mentorship magazine, which comes out quarterly and has no ads whatsoever. It's just timely content to help you stay the course. We also have workbooks for our free online workshop to help you get the most out of those, flowcharts to help you make better decisions, and a weekly email to provide timely content that you can unsubscribe from at any time. We never ask for any payment information, and we never share your information with anyone else. We just want to provide timely content and help you stay the course to retire successfully and stay successfully retired. There's no reason to wait, so join us now at retiremembership.com, where you can click on the link in the description and it'll go right there. We can't wait to see you in the community. Cheers. This podcast is educational only and is not investment, tax, or legal advice.